easy concept to understand for most traders. And to make it very simple, let's come away from the chart. And what I want you to think about is this. If we have an area like this, a lower area and a higher area at the top here, then what you want to understand about support and resistance is this. Support works like a floor. So it will work as an area at the bottom here that will push the market up or prevent the market from falling any further. So let me do this. Support. And then we're going to have resistance. Alright. So when the market is moving, let's say we were in a downtrend and the market is falling, the market will fall to a level of support. It will find support, and then the market will start to go bullish or start to go up, because this area here that was support pushed the market back up. It's almost like an invisible area that the market will be falling, and all of a sudden you'll see the market turn and start to go bullish. Resistance would be the opposite. If we had the market rallying or going up, the market will come to a resistance area, and then all of a sudden the market will start to fall. So a resistance area pushes the market down. It's an area that prevents the market from going up any further. The easiest way to think about these two concepts are a floor and a ceiling. So if you're in a house, you have one area that's a floor, one area that's a ceiling. If we were bouncing a ball and we drop the ball from our hands, the ball would bounce to the floor and then bounce right back up. That floor area is support. If we took the same ball and we threw the ball in the air, the ball will go all the way up to the ceiling and then bounce off of the ceiling and come back down. And that's resistance. So once you understand this concept, we could go to the market and look for areas that will support and resistance. And how you identify them? You identify them simply by drawing horizontal lines. So I'm going to use the horizontal ray for this. Let's go back to the market. I want to go to, let me see, maybe let's try a 4-hour time frame. So if this is what I have in front of me here, we can clearly see that this market was going down here. Lower low, lower high, lower low, lower high. Came to this level, found support, and then started going up. So this area right here would be considered an area of support. When the market was going up, the market pushed bullish. And right now I'm just doing major areas because I'm looking at the overall trend, right? So what I mean by a major area, all these areas in between, because of the rules of support and resistance, the reality of it is the market pushed up to here. This area here is a resistance level. It came right down here, which was a support level. It pushed up, resistance, came down, support, pushed up. But for now, I want us to just ignore, because we're studying, we're learning the concept. So we're going to ignore all these internal areas here. But what we want to see is this major area here, that when the market fell, this was the support level that pushed this market all the way up, making higher highs. Then we came all the way up to this area here. We formed a high. And from here, the market started making lower lows and lower highs. And this is where we're at. So this here, this area here, 1 would be our resistance level current, and area 2 here would be our support level. So that's how support and resistance work. One of the concepts that we are going to learn as well when we're talking about support and resistance is when the market breaks a support level or resistance level, we now have what we call an area where the market was, what was previously support or resistance, that now becomes a new area of resistance or support. So what I mean by that is this. If this market was going bullish like this, waving up, and it came to this level, it found resistance and the market pushed down. We came up to this level again, found resistance, and the market pushed down. But then we finally broke this level. This level here, that was previously resistance on this side here, pushing the market down. Once we break out and we come back to this level, this area here is now a good area for this market to find support and push the market up. So in this example here, we have an area that was resistance. When the market finally broke out, it came back to this level and finding support. So we have what we call an area where the market is previous resistance, which now becomes support. And the opposite could apply as well. So if we have the market falling here, the market bounced off of this level, finding support, and then we have the market breaking through that level. When the market comes back to that area right here, this is a good area that the market could find resistance and then continue to fall lower. So in this scenario, you have an area that was support that now becomes resistance. And why we identify these areas? If we were looking at, and let me just do this like this. If we were looking at these two areas here, these are areas where we want to buy the market. Because if the market, think about what we were talking about last week with market structure and how the market moves. The market breaking out of, if this area, again, think of the ceiling. If the ball, you throw the ball up, it bounces off the ceiling and comes back down. When the market finally, if you throw the ball so hard that it basically makes a hole in the ceiling, goes up, it will then come back down, hit the roof, right, the outside of the roof, and then bounce higher. And that's the concept. And the reason why we identify these areas, because these are areas that we want to look at entering the market. Because if I had to buy this market, but we're at resistance, resistance pushes the market down. So that's not a good place to buy. So I'll be waiting. When we finally break out, that's the first sign that, you know what, the bulls are in control. The bulls are pushing this market up. And we had enough momentum that we broke above the resistance area. So now we want confirmation. That confirmation comes when the bears pull the market down, but we realize they become exhausted because they don't have enough energy to just continue pulling the market down. We come to this area and we start to see bullish confirmation. That's where we want to enter the market to buy, to go up. And similarly, if we were looking at selling the market across on this side, same thing. When the market came to support, we expect the market to bounce, so that's not a good place to sell. But when the bears take control and they have enough momentum to close the candle below this level here, that's a good area that we want to wait for this market to correct. And once we correct, we want to see what the market does at what was this level that was previously support, that should now be resistance, and that's a good area where we want to sell, and the market will fall. So let's try to look at some real examples. Let's do this. Clear screen. This is the 4-hour. I'm just gonna zoom in to this downtrend here. I'm using this high here and this low just for the example purposes. We already know that the market moves in waves like this, right? This is what this market is doing, working its way all the way down to here. So between these two levels, we would have pushed down, sideways, go back up, push down, fall, up, down, up, fall. That's how we wave down. So if we're talking about support and resistance, if I come in and introduce some lines here, 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 that we didn't come back to, and that's fine. Can you all see? Let's look at this first move here. First move down here. When we finally had this bearish candle right here that broke below, the market came back to this level here and then continued to fall. So again, just to make sure we're looking at the same thing, freehand, but I'm gonna put it pink. And let's do 5. Right. Push down. Pull back. Finally broke below this level. Here. This big bearish candle is the break below that level. That's the first sign that, you know what? This area here, because if you watch, we had 1, 2, 3, 4, 5, 6, 7, 8 candles. 8 candles that could not break below this level. So this big candle here that finally broke below this level shows us that we now have enough momentum by the bears that this market closed below this level. Now, what are we waiting for? We want confirmation. The bulls tried to take control, pulling the market back to that level, and this area here that was support, that was pushing the market back up on this side here, when the market came back to that level, pushed the market down. So if we entered in this area here, we would have been able to take profit as this market pushed down here. Again, I'm going to clear the screen because it could look messy and we just want to keep it simple. Second level would be here. Same thing. When the market fell to this area here, again, we had a breakout here with this candle here, this push down here. The bulls took control, pulling the market back up to this area. When we had confirmation here, the market fell. So this area here was acting as support, pushing the market back up. When we broke below, it acted as resistance on this side here, and we had an SBR, support becoming resistance. So in terms of confirmation, remember we would have done first things that we would have done at these areas here. This is now where you look for your candlestick formations. So we have a nice bullish engulfing, a strong bullish candle here. Actually, sorry, this does not engulf. We have a bullish candle here, which for us would have given us entry at the close of this candle here. Your stop loss could have been above this area here, and if you went for 1 to 2 or 1 to 3 down here, you would have made profit on this trade. And again, same thing. Let's clear the screen again now. Let's look at the next step. if I come here, we could see this market was falling here. Look at the area. Falling here. Something, you see this big wick? The market fell to this level, and then the bulls took control, causing this big push up. We came back here, we had a small bounce again, but then finally this big candle closed below this level. Once we closed below this level, the bulls took control, we work our way back up, and if we sold within this area here, again, the market fell. So sometimes, and that's why what I want you all to understand is not, I want you all to learn the concepts. If you learn the concepts, you would be able to distinguish these setups. Now, if you are so focused on the level, for instance, the first one came up to the level, touched the level and came above and then fell. This one here came up to the area, didn't quite make it to the exact level, but it's the exact same thing. So if you understand the concept, you know what we're looking for. We're looking for a correction, and once we have that correction, once we're gonna wait for the bears to take control again. Once they do, we could enter, stop above the area, and then the market fell, and that's how the market will fall. When we're going up, it will be the same thing, right? We don't have enough. Actually, we could still use here. This one was, and let me do this then. This market started pushing. What we have in front of us here is this area here would be the lowest point. This area here would be the highest point. This market pushed up, and look, this is a good one. Pushed up to this level again and fell. If I come in and draw a line like this, look at this here. This market found resistance once. Let me identify it. Once, twice. This market was pushed down. When we finally broke out, all we're waiting for is the market to work its way back to this area. So what was resistance on this side will then become support on this side, pushing the market up. So this would have been a recent trade that we could have taken, because this is a live market on gold, right? So if we were looking at gold and we saw this, we finally had enough momentum. Yes, the market continued to push. Some traders would have been jumping in because they know they fear missing on the trade. But if you are a patient trader and you were waiting, what you would have seen is the market work its way back down to this level here. When we came to this level here, you might have gone down to a lower time frame and start to look for your bullish confirmations. Once we have the bullish confirmations, you could have entered at this level here. Your stop loss would have been beyond this area here, because you want the market to find support. And as you can see right now, we would have been in profit. Depending on where our target, if we were looking at this market going after this area here to make a new high, we're still in this trade. This would have been a recent trade that we could have executed using support and resistance. All right, let me just zoom out. And support and resistance works on any time frame. You want to see the exact same thing that we did here? Let me do this. This market was going up on this side here, came to this area, and something, and think about it like that, something just randomly caused this market to stop here. It's not random, but when you look at it and we draw a line, let me use the, I want to use the horizontal ray, right? When we draw a line from this area here, and if we go back and look at it like this, up, cause this market to fall. So this is resistance. Finally broke out. Let the market do what it's gonna do. When the market works its way back down to this zone here, right? Came back here. Yes, it came a little bit below, but we stayed on the top side. So we found support here again, and we have now resistance becoming support. And the market started making higher highs and higher lows on this side here. So if we bought here, stop below this level, buying, resistance becoming support. If we were going after this high, which is where your target would be, we're still in this trade, but we're positive. And we could find countless examples of support becoming resistance and resistance becoming support. Let me go to, just to show you, maybe let's do a 15-minute time frame to zoom in a bit. Maybe you missed the initial entry. We could see here, push up, push down. The market found resistance here. When we finally broke above the level, came back to that level, we had a nice bullish engulfing candle here, stop beyond here, entry here, and as you can see, we're in profits right now. So that's how it works on any time frame. If we were selling across on this side here, we could see right here, the market was falling, finally broke below this level here, came back to the level, rejected, we had a nice bearish engulfing here, stop beyond here, entry here, the market fell off. And that's the 15-minute time frame. So that would have allowed us to have, maybe let's say within 1 day we would have been able to sell, make some profit, and then when the market conditions change, we would have been able to take a buy and enter. And again, you could see here, all this is being patient, because we would have sold here, we would have been out. The market was coming back here, maybe it will continue to fall, but then when we realized in terms of market conditions, the market started making higher highs and higher lows, we simply waited for this break of this area here to form a higher high, come back to this level, entered, and the market pushed up. So that's how support and resistance works, and that's how you will find the patterns: SBR, support becoming resistance, and resistance becoming support. Now, in a consolidation or a sideways market, when you identify the range and you say, all right, this is my support level, this is my resistance level. And what consolidation is the market moving sideways. So rather than going up, making higher highs and higher lows, you'd have the market going sideways like this. And when you identify a range like this, it's very easy to trade it. What you want to do is simply buy support, sell resistance. So you're gonna buy the bottom level here, and you're gonna sell the top level here. So when the market comes back to the bottom of the range, you're going to wait for bullish confirmation. Here, bullish candlestick formations at this level. That's where you want to buy. Stop beyond the range, because as long as we're within the range, you're going to trade the range. So you're going to be wrong in terms of your stop loss if the market was to finally break out of the range like we were looking at before. But if we're staying in consolidation, then when you get a setup here, you get at the top, you're going to look for bearish entries, a bearish candlestick formation. Your stop is going to be beyond the level, and then you're going to look to sell, and you're going to take profit down at the bottom of the range. That's how you trade consolidation. So let me look for an area. Let me see something. Trying to find an area where this market was consolidating. Right, and I could look. If I was to identify this area here and this area here. So during this period on gold, the market was going sideways. We formed a level here that was support, a level here that was resistance, and when the market pushed up to this area here, the market bounced between this range until the market finally broke out. So again, if we were in this type of market condition, when the market came down to this level here, we would have been looking to buy this market, stop beyond the level, and you could buy the market all the way up. When the market came up to the top here, you'd be looking for bearish conditions here, stop beyond this area here, and then you could have sold the market all the way down. Come back again here. Once we stay within the range, we want to switch to buy-in. So we would have bought this market here, stop beyond the lows, we could go all the way up to the top, and vice versa. What I will point out to you is, if the market, and that's the thing about trading, and that's why no trader will win 100% of the trades, even if you're doing the exact same thing, right? No strategy, no trader, no EA, no robot will win 100% of the trades. And this is exactly why here. If we took, let's say this is where we were, right? In this market condition. Let's say we had to wait for the range to form. So within this level here, we didn't really buy anything, right? Then the market came down here, we bought. On this first trade here, we would have had a win. The market came up here, we rejected nicely, we entered selling. On this second trade here, we would have had a win. The market came down to the range here. Maybe, and this is how it will go. Maybe, you see this first bounce here, maybe you bought this first bounce. And that was your third trade. The market went up a little bit, gave you some profit, but then let's say it came down because of this push and stopped you out, you would have taken a loss. Let's say you waited patiently, the market broke back into the range here, and you realized you were going to have a continuation. You now had a fourth trade here that you won. You took a fifth trade at the top here, thinking that this market was going to come all the way back down to this level here, because you were saying, you know what, we're in the range, and you trade in the range. The market came down, you were in profit, maybe you locked in profit, so maybe on this one, you move your stop to break even, because we would have reached halfway within the pattern, right? And then the market turns around and finally breaks out of the range. So this fifth trade could have either been a break-even trade or a losing trade. And you did not do anything different. You did not do anything wrong. That's just how it goes. So in us placing 5 trades here, we would have won 3 trades outright. We would have maybe lost 1 trade outright, stop loss hit, and then the 5th trade would have probably been a break-even trade. That's how your trading will go. And the point of it is, you want to make sure, if we actually talk about pips here, right, just for example, let's say when we got in here, and this market, let's say this was 350 pips. So we won 350 pips. We won 350 pips again on the way down. Let's say this trade here, so that's 700. This next trade here, we lost 70 pips. So that's now 630. Then we entered here again, and let's say on this one we made 315 again. Right? So that, let's say 7, 8, 9, 10. So we're about 900 and something pips and break even on this one. So you see, when we're winning, we were winning 350. When we lost, because our stop loss is there to protect us, we got stopped out, we lost 70 pips. That's how it will go, guys. That's how we'll be doing the exact same thing, nothing different. We did the exact same thing here, but trade 3, the market just came and stopped us out first before it continued. And we took a loss. And then trade 5, if we're going after 350 pips and this market gave us 250, we would have either secured some profits or moved our trade to break even. We shouldn't, in an example like that, have anything at risk again still, because the majority of the move happened so far. So on this one, we would have taken break even. If for some reason you left it, you would have taken a loss. And even if we took a loss on this one, again, it would have been 97 pips or 100 pips. So when we won 350 three times, and then we lost 70 and 90. So we would still be in profit. Alright guys, so that's how support and resistance works. For your homework, and again, I'm going to be touching on it just now. Part of this program is homework. I have not received any homework from the two members who are doing the live session. So the members there are some members that can't make the live sessions, so they basically watch the recording after. They have submitted their stuff. I basically have 4 people outstanding to submit homework assignments from the first 2 modules. The homework helps me because right now in these sessions are live, but I am just explaining to you. The homework helps me identify whether you are grasping the concepts, and maybe I need to show something differently, or I need to go over a topic. That's what shows me that. If you all are not submitting the homework assignments, then I'm not going to be able to help you all. Alright, so for homework today, for today's session, I want you all to go to our chart, again any chart, and I want you all to identify, let me do this, 5 support levels, 5 resistance levels, I want you all to identify 3 areas where we can clearly see RBS, which is resistance becoming support. And for number 4, I said 3 of these, right? And for number 4, 3 areas where we have support, SBR, support becoming resistance. So we want 3 support areas, which again, just to go over, areas that you realize pushes the market up. Resistance would be areas that pushes the market down. Resistance becoming support will be that the market was going up. Found resistance, the market broke out, came back to that level, and then pushed up. So that will be this area here, area where resistance became support, and then support becoming resistance would be the market falling like this. The market found support, broke out, came back to the level, and then fell. And this area here would be your support becoming resistance. So that's your homework for this week. You're going to identify those levels, 5 support, 5 resistance areas, any chart, right? And then 3 areas that are resistance becoming support, and 3 areas that are support becoming resistance, guys. All right, so that's it for tonight's session. I will see you all next week. Please God, guys.